Good evening, everybody, and a special welcome to those that have come along to join me live this evening. I appreciate some of you are probably listening to this as a recording, but welcome to everybody, irrespective of when you are tuning in. You are very welcome. My name is Anne, and I am going to be your tutor for the session this evening, where I'm going to take you through a task from the First Intuition mock number 1 from the Applied Management Accounting course. Now, can I just check of the people that are here with me live, does everybody have access to this question? If not, I can just pop it in the chat box for you. So it's just from our First Intuition mock 1. If you are a First Intuition student, you will have it already. Otherwise, it's in the revision pack that you should be able to download. Everybody's got it. Okay, lovely. So let me just mention, in terms of our revision pack, you will see that before we actually commence each task, we have something of a task briefing. We start off by telling you what the task is going to cover. So this one will be short-term decision making. It's going to be worth 20 marks in the assessment, gives you about 25 minutes to do it. And more importantly, the bit I was getting to is here, you have a task briefing. So this is really like a set of revision notes. And it just says, actually, in terms of a task 5, these are the sorts of things that you need to know. So we've got a whole little chat here on relevant costing. And I believe that becomes particularly relevant later in this question as we move to parts F and also part G. So relevant costing becomes important there. We actually start off our question by having a look at some limiting factors. We're going to be reviewing limiting factor analysis in the first parts of the question, and linear programming can also be tested within this particular task. So that's just a review of the sort of topics you ought to be aware of. Any of that sounds like you're a little bit rusty, then maybe just go back to the course notes from your course provider, whoever that may be, and have a read through. So I hope you're going to find this task helpful. Here it is. The task we're going to cover this evening is called MEG-MOGs. And MEG-MOGs, crucially, makes 2 products, a MEG and a MOG. We've then got some information about each product MEG and product MOG. You can see in the columns alongside each other. And I think it's quite important with this sort of question, when I'm presented with information in a table format like this, that I understand exactly what I've been told. So I can see I've got the selling price up at the top here, and I can see that these are the amounts of money per unit. That's quite important. So the unit figures. So here's my selling price. Under that, I then have a list of variable costs. So actually a subheading here. So I've got variable costs, some material, some labour, and then a subtotal of variable costs. So this is actually a subtotal here. It's these two together. So the variable costs of material and labour added together give me that subtotal. I've then got some fixed costs, a subheading for those, split between production and administration to give a total. There we go. Those two grouped together give me the total fixed costs. And then I've got a profit per unit. And just because I like to be really quite sure about what I've been told, I might just want to prove that profit figure. So let me just check I'm understanding what they're telling me here. The product MEG, as an example, sells at £600 for a unit. It involves variable costs of 450 and it involves fixed costs of 100. So to get to profit, I need to deduct both variable and fixed costs. So it does indeed give me a profit of 50. So now I'm quite happy and satisfied that I understand where that profit comes from. And as well as all this information that I'm given for each individual unit, I'm also told the monthly demand. So how many customers are demanding? So they're demanding 100 units of MEG and another 120 units of MOG. Now, as I read on, I learn something really quite important. I learned that the materials are in short supply in the coming month. And actually, only 750 kilograms of material are going to be available from our existing supplier. So with that in mind, I've already got an idea now where this question is going to take me, We've got a material in short supply. It looks like it's going to be setting me up for some sort of limiting factor question. But the first thing the table is asking me is, what is the contribution per unit of both meg and mog? And what then is the contribution per kilogram of material? So shall we start with the contribution of a full unit? At the moment, we have the profit of a unit. How do I find contribution? How could I find the contribution of product meg to begin with? What are we thinking about that? Anybody remember how to calculate contribution? Remind you, if you're not sure, contribution is calculated. Oh, I've got an answer coming in now. Excellent. Yes, exactly right. It is the selling price less the variable costs. So contribution per unit, I'm just going to actually write my formula here because this is a revision session. So it's going to be the sales price of the unit minus the variable costs. Absolutely right. So looking at product meg, if I put my working over here, had a selling price of 600 and product meg had variable costs of 450. That would give me a contribution of 150 for a complete meg. I then repeat exactly that process with mog, which sells for 650 and also has a variable cost of 450. Meaning that product mog actually has a bigger contribution. Now that phrase contribution is actually an abbreviation. It's shortened for contribution towards fixed costs and profit. The idea being that when I sell a product for more than its variable cost, I've got a bit of money left over. What do I do with that money? Well, I save it up. I save it to help me pay my fixed costs. So I always imagine with this sort of idea that we actually have a jar on our shelf. Let me imagine that I've got my jar here and my jar is headed up fixed costs. So when I sell my product meg and I get £150, having sold it, paid the variable costs, I've got £150 left. I pop that into my jar called fixed costs. I sell another one, it goes into my jar called fixed costs. Maybe the fixed costs for the period are, let's make it £750. So I keep topping up this jar with 150s and however many is necessary to pay off that £750. So there we go, £150 into the jar each time till I've reached my fixed costs. After that, I moved on to the next jar in my shelf, which is profit. So once I've paid the fixed costs, if I'm able to sell another few units of the product, then I'm able to actually start topping the jar. So contribution is really an abbreviation of contribution towards fixed costs and profit. So you can see the more I make, the more I can pay towards the fixed costs, and the more I make and sell, the more I get to put into my profit jar. And that's the idea behind contribution. What does my unit contribute towards these other areas? Right. The next thing is the contribution per kilogram of material. So I know what it contributes for a whole meg, but how much does it contribute per kilogram? I need to know how many kilograms it takes to make each unit. But the question doesn't tell me that precisely, but it does give me the information to find out. How many kilograms are used making a meg? Anybody see that? Have a look at the material line here. Yes, well done. So you know that you're spending £150 on product meg, but you also know that it's actually £50 for each kilogram. So then from that, I can work out I need 3 kilograms for a meg. When I make mog actually costs me £250. I'm still working on £50 per kilogram. So I'm working on 5 kilograms then for product MOG. So now I know the contribution of a whole meg and a whole MOG. I'm able to go on to my next step and say, in terms of the contribution of each kilogram, if this one uses 3 kilograms of my precious raw material, can you see that it actually contributes £50 per kilogram? Whereas this one uses up 5 kilograms of my precious scarce resource. So this one actually contributes £40 for each kilogram. So on the face of it, product MOG looks like the better product. It does contribute more in total than MEG. But when I really get down to it, I can see that if the kilograms are in short supply, it's very important that I use every single kilogram for the best possible reasons. And because my objective is making money, then I want to make sure I make the very best use of each kilogram. And actually product MEG does that better, because using a kilogram on product MEG will generate me £50. I only need to use 3 kilograms to get the 150 back. So in terms of an order then, my order of preference, would you agree I would rank these into MEG being the most favourite and MOG come in a close second. So it's going to be MEG and then MOG. And that helps me with part B of the question, the optimal production order. It's MEG and then MOG. So do not be lulled into this answer thinking that MOG makes more money, so it's the favourite. You've got to find the contribution per unit of limiting factor. You've got to look at your scarce resource and see which one makes the very best use of that one. So in this case, MEG. Is that all right so far? Any questions? All good? Right. Should we have a look at part C then? Part C says complete the table below for the optimal production mix. So this is asking me what is the best number of units to make of each, the MEG and the MOG. I think I can perhaps squeeze my answer in on the bottom of the page here. So what I'm very conscious of is that I might run out of materials. I've only got 750 kilograms, so I've got to make sure I don't use more than that. I'm going to start with product MEG because I just decided that's my favourite. So the first thing I want to know is how many products MEG do the customers want? If I'm going to satisfy maximum customer demand, give as many MEGs out as possible because they make most money, how many would that be? Well, we know the demand here. We know that 100 MEGs are demanded by customers. So I'm going to start as my first choice with MEG. And I'm going to make the maximum demand, which is 100 units. And I'm very aware that each unit uses 3 kilograms of my material. So that means I've used up 300 kilograms of my material by the time I've finished making the MOG, or the MEG rather. Goodness, it's like a tongue twister. So I use 300 kilogram making MEG. Now what I also want to do now is make a note of my maximum material, because otherwise I'm going to get carried away and use more than I've actually got. So the maximum material available was 750. So do you agree? We've got 450 kilograms left. That was the balance. So I can use that then for my second choice product. I only had a first and second here. So the MOG is basically the balance. I can't do the maximum demand. I already know that my materials are limited, so I can't do everything that I'd like to do. So here I'm just going to use up whatever I've got left, which is 450 kilograms making MOG. So that was going to be my next question. How many MOGs do you think that you can make? You need to be conscious of how long it takes you. Remember, the MEG and the MOG didn't take the same amount of time. The MOG actually, sorry, not time, kilograms. they didn't use the same number of kilograms. The MOG actually needed 5 kilograms. So you can make you can use 450 kilograms using 5 on each one. So working backwards, I get an answer of 90 units in there. Oh, no problem. Just go back to our workings here. It's very easy just to pick up the wrong number, but our little workings here, remember, we worked out that we needed 5 kilograms to make the MOG. So as long as you're getting the method right, that's what I'm interested in, really. So that means then I'm going to make 100 units of product MEG, and it means I'm going to make 90 units of product MOG, because I've produced them in my order of preference, MEG then MOG. I could do all the MEGs right up to the maximum demand, but the MOG just had to be, well, whatever I've got left over. What will the contribution be then for MEG and for MOG? How am I going to find the contribution of MEG? Any thoughts on that one? How much will MEG contribute in total? We know how many units we're going to make. How much will that contribute? Any thoughts on that? Think about what you've already calculated. You know from up here that the MEG makes £150 for a whole one. So got £150. Yes, exactly. £150 is the contribution of the MEG. And I'm learning here that I'm going to make 100 of them. So how about our contribution becomes 100 units of MEG multiplied by the £150 for each one. So do you agree? We end up with a £15,000 contribution when I make MEG. Excellent. So when I move on to MOG, I couldn't make all of them. Would have been nice if I could, but I couldn't. I ran out of materials, so I can only make 90 units of MOG. So we've got 90 units of MOG multiplied by, well, how much does a MOG make? The whole one makes £200. If I've got 90 of them at £200 each, do you agree? That would be £18,000 that I generate from making product MOG. And that's actually the best contribution that I'll be able to come up with. This is the contribution from the optimal production plan. Any other combination of doing MOG first and then doing MEG second would make me less money. This is the most contribution I can make. So I'm happy with this. Any other combination of production would make less. This is my optimal plan from part C, and this is just the contribution that's earned from the optimal plan. Okay, so being able to work through limiting factor questions like this is very important. It is the sort of thing that you can expect to see within this particular task. So make sure you understand how to find the contribution per unit, and then the contribution per unit of limiting factor, and also then how to get that into an optimal plan and work out the contribution. Okay, part E then is where it starts to get a little bit more interesting. The business is being approached by another material supplier who can supply up to 200 kilograms of material at a cost of £95. This is a premium of £45 above the normal cost per kilogram. And we know that because the normal cost is £50. So they now want to charge £45 extra, so £95 per kilogram. And the question is, should the business purchase this extra material? And we've then got to give a reason for that. Well, let me take you back a step and say, if we did have extra material, what would we do with it? What would you make if you had any extra material? Because we can't make everything we want to because we've run out of materials. If I could get some more, what would I be doing with it? I'd be making some MOGs. I completely agree. We've only made 90 of product MOG, and yet there was demand for 120 of them. So if I had some extra material, I could actually make some extra product MOGs. So the question next then is, would I be willing to pay this extra price to get the extra material? Well, if I used the extra material to make a product MOG, I could make an extra £40 per kilogram, because we worked out that product MOG makes £40 per kilogram. That is their contribution. So if product MOG is making £40 for every kilogram used, and I buy the extra kilograms costing £45, is that a good idea? It isn't, is it? So then I would say that I should not purchase the additional material. And the reason that I've discussed so far without even looking at the list, which I think can just spin my brain, so I like to come up with my own reason first, and then I'll try to match it with the solution. I should not purchase the additional material because it would be costing more than I'd actually be making. So let's see if we can find an answer that fits with that. So it says the additional cost per kilogram, which is £45, is either less than or greater than the contribution per kilogram. Well, the contribution per kilogram was 40. And I was working in kilograms. I wasn't comparing kilograms with units. That wouldn't make much sense. I need to compare what a kilogram will cost with what a kilogram will generate. So I'm not interested in these ones. They're comparing the kilograms with the units, which isn't really like with like. So I don't want to work with those. That leaves me with just 2. So the additional cost per kilogram is less than the contribution per kilogram. Well, it's not at all. The additional cost per kilogram is actually greater than the contribution per kilogram. So that would be my answer. So I should not go ahead because the additional cost of a kilogram is greater than the contribution of a kilogram. So I'd be worse off, is the short answer. Nobody wants to, again, buy more materials in to be worse off as a result of it. So I would say, no, we wouldn't do it. The additional cost is greater than the contribution. So it's not worth doing. Okay. Moving into a slightly different topic area then for the last couple of parts of the question. But before we do that, does anybody have any questions on what we've done so far? Anything I can help with? If not, we're going to have a look at the area of relevant costs. And I think when I read this requirement, it says, Megmogs Limited is considering replacing one of their machines. When deciding whether to replace a non-current asset, which of the following costs are relevant? So we're deciding whether to replace a non-current asset. So I'll go on to get rid of my old asset, replace it with a new one. Which of the following costs is relevant? You've got to firstly perhaps remind yourself what a relevant cost actually is. And the task briefing runs through this, but let's see if we can build up. I'm going to call it relevant cash flows because it applies to actually income as well as just cost. And relevant cash flows are three things. They are flows of money that are cash. So only cash costs are relevant. I'm interested in cash in, cash out. So if it's not cash, it's not relevant. They are future, which means I ignore anything that's already been dealt with in the past. We would call those things sunk costs. So I ignore anything from the past, such as a sunk cost. I would also ignore anything that I call a committed cost. So maybe something I haven't paid yet, but I can't get out of. So if I can't get out of it, I'm committed to it. So I may as well have already paid it because I can't avoid it. It's committed. So cash must be future. And lastly, must be incremental. And incremental means that this cash flow changes as a result of the decision. So if I'm thinking about buying a new machine, I'm only interested in cash flows that are going to happen if I go ahead and replace my machine. Any cash flow related to anything else, I'm not interested in. I'm simply interested in the cash flows where I'd say, if you change the machine, it will cost you this much. If you change the machine, you'll receive this much. That's all I want to know. The cash flows relevant to this decision. And particularly where we're talking about cash and cash flows, one of the very common ones is that we must ignore depreciation because it's not cash. Depreciation is not a cash cost. We don't write out a check to pay our depreciation. It's just a measure of the wearing out of an asset, but it's certainly not a cash figure. So I ignore depreciation. I also ignore things like an apportionment of a head office cost, perhaps that is being paid anyway, on the basis of it not being incremental. So often there's things that we come across in these questions that we ignore because they don't fit my three criteria. So now we've revised that, should we go back to the actual question? So when deciding whether to replace a non-current asset, which of the following are relevant? And I'm looking for two of them. So thinking about what I've just talked about here, the original cost of the asset that has been replaced, what type of cost might that be? I would say that that is a sunk cost. That's long gone. I paid for that a long time ago. It's certainly not a future cost. It's a cost that happened many years ago when I bought my original asset. So therefore, that is not relevant. I only want future cash incremental flows. How about the cash received for the new cash received from the sale of the old asset? Just check the criteria. You're making a decision. So if you decide to go ahead and change your asset, you receive cash for the new one. You receive cash for the old one, rather, to finance the new one. So criteria, is it cash? Yes. Is it happening in the future? Yes. And is it happening purely as a result of my decision, or is it happening anyway? It's happening purely as a result of this decision, because if I don't decide to replace the machine, then I don't sell the old one. So this is a direct result of my decision. So that one is actually a relevant cost. I then apply the same criteria to the next one, the replacement cost of the asset. So the cost of the new one. Is it cash? Yes. Is it future? Yes. I haven't made the decision yet. Once I've made the decision, then there would be this cost of buying the new one. Is it incremental? Is it a cost that's only going to happen if I go ahead with this decision? Yes. Because if I decide not to replace my non-current asset, then I won't have to pay for the new one. So that looks to be my second answer. I then just want to rule out the others. So accumulated depreciation of the asset. Well, depreciation is not cash, therefore not relevant. So I can get rid of that one. And then the scrap value of the new asset. Well, that might be relevant in calculating my depreciation charge if I'm going to do some sort of straight line depreciation. But the scrap value of the new asset, I'm not going to be scrapping the new one, am I? I'm going to be scrapping the old one in order to buy the new one. So I'm going to say that is not relevant to my decision today, where I want to decide whether to replace the asset or not. That might be relevant at some future stage, not relevant now. So if there's two correct answers, I'm pretty sure I've got both of those now. So that would be relevant maybe in the future, but it is not relevant now. It's not a cash flow now. It could be in many years' time. Okay. And then to finish off this one then, we have got Meg Moggs has been approached by a large contractor who has asked for a quotation for the supply of a bespoke product. The manager, your manager, has asked for your help with some of the calculations for the quotation. You've gathered together the following information to support your calculations. So we've now got materials, A and B. We have labour, skilled and unskilled, and some variable and fixed overheads. So we've got all these different categories of cost, and we need to decide if these are relevant. So when I produce a quotation for this bespoke product, I look at the requirement here, it says complete the table with the relevant costs to include in the quotation. So remember the concept of relevant: future, cash, incremental. So things that are changing as a result of this decision. So shall we have a look at material A? 1,200 kilograms are required. So this material is used in all the products that Meg Moggs produces. The current inventory was purchased for £2.20 per kilogram. Purchased, past tense, current inventory, I've already got it. That is what I call a sunk cost. Sunk or historic cost. It is not relevant. The current replacement cost from the company's normal supplier is £2.50 per kilogram. So that is cash. I'd have to pay for it. It's future, because I haven't got it yet. I'd be paying for it if I decide to go ahead with this bespoke contract. And it's incremental. I'm only going to buy it if I decide to take on this contract. Scrap value is completely irrelevant because I'm not going to be scrapping it. I'm not going to be scrapping anything. I'm actually trying to buy more because I want to undertake this new project. So I think the relevant cost is going to be 1,200 kilograms, and they're going to cost me £2.50 each. So £3,000. So with this sort of question where we're dealing with relevant costs, it's very common that you get all sorts of things thrown in here that are not actually relevant. That's the whole point. The examiner wants to test you on the fact that you can spot the relevant from the non-relevant ones. Should we do material B next? There are 4,000 meters in inventory. I need 2,000 meters, by the way. 4,000 meters in inventory left over from a previous job. Okay, so the cost of those would be irrelevant because it is past. It's sunk. There is not expected to be any further use for this material. Now that's interesting because it basically means that I've got all this leftover material and I've got nothing to use it for. I have no use for it. We've received an offer to buy the full 4,000 meters for £500, but the buyer wouldn't want to buy anything less than the full inventory. Now, we only need 2,000. But the buyer is saying, I will take what you've got, but it's all or nothing. So just think about that. If I undertake this project, this bespoke job, what's going to happen? I'm not going to be able to sell it for the £500. So by undertaking this project, I lose out on £500. So let's just think about that. If we do this project, let's rather just say, if we do the project, we receive 0 because we use the material, so there's nothing to sell. If we decline the project and decide that we don't want to do it, then we receive £500 from selling material B to somebody else. So I've now got to look at those two things and say that what then is the cost of the project? And yes, I'll come back to that question, no problem. So if I do the project, I don't get anything. If I decline the project, I get £500. What is it costing me to do the project? Well, I'm actually losing out on £500 because I'm receiving absolutely nothing. So by declining the project, I'm going to receive 500. So the cost, we call it an opportunity cost. It's the cost of the next best alternative. The opportunity cost is 500. So if I do this project, it costs me £500. I would be £500 worse off. I'm losing the £500 that I would have received if I said no to the project. So the answer for that one, oh, where's it gone? There is 500. So do make sure that you're familiar and confident with the concept of an opportunity cost. So somebody asked me to explain again, what is a sunk cost? Yep, sure. A sunk cost is something that's in the past. Remember, a relevant cost is future, cash, and incremental. So something that isn't future is past or historic. And the other name for that is sunk. So anything that's already spent, anything that's already passed, can't go back and change it. It's called a sunk cost. Right. Skilled labour comes next. The skilled labour force is paid a guaranteed annual salary based on a 40-hour week at a rate of £12 per hour. That then is not incremental. Nothing about that is changing. So they're paid a guaranteed salary, 40-hour week, £12 per hour. Doesn't matter whether they're working or they're not working, they get paid that anyway. There is no spare capacity in the current workforce. So if I take on this job, how is it going to get done then? Well, there's a choice. Overtime can be paid at time and a half, or skilled labour could be brought in from outside at a rate of £16 per hour. So I have a choice. So if you were faced with this choice, let's think about what you'd do. We need 200 hours. We want to go ahead with this job. So do we say, let's pay overtime, time and a half? They're paid £12 per hour at the moment. So that would be a rate of £18 per hour. Or my other option is to bring in staff from elsewhere, outside staff. And of course, there's lots of other implications of bringing in people from outside, but we're not asked to discuss them. We're just asked for the numbers. So assuming everything else is equal, the question is, would you prefer to spend £16 per hour on your additional staff, or would you prefer to spend £18 per hour on the additional staff? Well, of course, we'd bring in the cheaper ones, wouldn't we? So we'd bring in the outside labour, costing £16 per hour. I need 200 hours. This is incremental. It's cash and it's future. It's cash because I'd have to pay them. It's in the future because I haven't paid them already. And it's incremental. I'd only do it if I take on this job. If I don't take on the job, I don't need the extra staff. So 200 hours at £16 is the skilled labour. Perfect. Nearly done then. We're on to the unskilled labour. We need 100 hours of that. There are spare members of staff who are unskilled. They must be paid a minimum of £8 per hour for their 30-hour week. There is no other use to be made of their time, and they're employed full-time. And they're available. So is there any future cost associated with these people? Well, they are paid anyway. So yes, I pay them cash. Yes, I'm going to be paying them in the future, but am I going to be paying anything over and above what I pay already? Is there any incremental cost to this? And I would say no. There is no incremental cost. Just means extra, if you like. They are paid anyway. They're going to be paid. So I can either pay them and have them doing nothing, or I can pay them and have them working on this job. But it's not going to cost me any extra to have them working because they have spare capacity. I'm sure they'd probably be very thankful of the work. So I'm going to have an unskilled labour cost of £0 on the basis that I'm already paying them. I don't need to pay them any extra. So no relevant cost. And then the overheads, 2 categories of overhead. The variable overheads are incurred at £2.50 per labour hour, skilled and unskilled. And then the fixed overheads are absorbed at £1.40 per hour, skilled and unskilled. Now there's a difference between variable and fixed. Variable are costs that are going to be incurred if I go ahead and take on this job. So let's imagine it's the cost of running the machine for this particular contract. If I say no to the contract, I don't need to turn the machine on because I'm not going to be doing the work. If I do take the contract, I do have to turn the machine on. So I start using up electric costs. So therefore I do have an additional cost. So these variable costs, fair enough, I would say that they are incremental. They are going to change as a result of my decision, run the machine or don't run the machine, incur the cost or don't incur the cost. £2.50 per labour hour. And the labour hours need to be the skilled and the unskilled. So 200 that were skilled, another 100 that were unskilled, 300 hours are going to be needed altogether. So 300 hours, oh, that's the wrong line. £300 hours at a rate of £2.50. So £750 for that one. Fixed overheads, on the other hand, are things more like rent. By their nature, a fixed overhead doesn't change when production changes. I can make more units and this cost stays the same. So something like rent. Doesn't matter if I make more, doesn't matter if I take on another job. Does the landlord put the rent up? No. So the rent is not incremental. It doesn't change as a result of my decision. So for the fixed overhead, I would say it is not incremental. I'm not expecting the fixed overhead to cost anything different just because I undertake this job. So my only cost is the overhead, which was the variable part. So 750 in there. Okay, there we go. So I really like that example, because I think it actually really stretches our understanding, particularly in those latter couple of bits where we're covering something called relevant costing. I know that you've certainly seen limited factors also at level 3, so that should be a little bit more familiar, but that extra section there on relevant costing, I'm very thankful to have that in this question. I think it's a great revision for us and helps us to understand perhaps a little bit more thoroughly what relevant costs are. So if you found that example tricky, please make sure that you just go back into the task briefing and review the little section here, which will explain a little more about how that works. Okay, I'm going to stop the recording now. Then if you do have any individual questions, I'll be able to help you out with those. For those that have been joining at home, thank you very much for watching. Please get in touch with us at aatrevision@fi.co.uk if there's anything that we can help you with further.